Investors are seeking diversification. A couple of years ago, the so-called BRICS and other emerging markets were an easy answer for this. But the commodities crisis and the instability of major economies have left investors seeking new opportunities. The strength of the Filipino economy rises as one of the most appealing opportunities in emerging financial markets. To evaluate this further, I would like to introduce our next moderator. He is a New York-based financial journalist with more than a decade of industry experience. For the last 9 years, he has been the U.S. correspondent for El Economista and currently heads its U.S. bureau. Jose regularly appears as a Wall Street analyst and contributor for CNN. Over the last 2 years, he has been reporting on financial and economic affairs for Deutsche Welle. Please welcome Jose Luis de Haro.
We're going to be talking about a very important topic here today, which is the access to financial markets and the access to capital markets, which at the end, it's the essence of continuing economic growth in the medium and the long term. And obviously, we are going through a lot of volatility right now in global financial markets. We're going to talk about that in a minute, but let me introduce first my panel here. On my far left, we can see Marc Mealy. He's the Vice President of the US-ASEAN Business Council. Near him is Ed Francisco. He's the President of the investment bank at BDO Capital. And here on my left is John Chambers. He's the Chairman of the Sovereign Debt Committee at Standard & Poor's.
I think the multinational companies that we work with still see, in spite of the turbulence now, the Philippines and ASEAN is still really a growth story. I think it's fair to say that many of the lessons learned from '97, the maturation of the financial sectors, the capital markets since '97 have certainly served the Philippines as well as the ASEAN region really, really well in terms of 2008, in terms of the level of resiliency that was demonstrated.
We have an investment grade rating on the Philippines. It's BBB. It has a stable outlook. The stable outlook is premised that the results of the election won't have a change in policy either on the fiscal side or on its attitude toward the business investment.
If you really think from 2000 to 2014, the growth of the financial sector and capital markets has really outpaced even GDP growth. You're talking about equity markets that went from, let's say, $500 billion in 2000 to over $2 trillion by 2014. Debt markets, similar growth, and even a degree of bank lending, going from 500 billion to, again, over 2 trillion. So I think people are saying there's still very strong liquidity, and really I think it's the regional investors that are probably the ones maybe have been a bit more at the forefront of seeing where there are opportunities and maybe a little bit less risk averse.
The Philippines is in a fortunate position from the financing perspective. There's so much liquidity, again, because of the OFW money, and so the deposits have continued to grow. From a banking perspective, and of course I will allude to the other experts in the afternoon session, but our loan-to-deposit ratio in general is still low. I even did a calculation. The top 5 banks in the Philippines can fund at least $4 billion of PPPs. That's how big the banks have become already. Our single borrower limits, thanks to the BSP allowing it, has grown to $1 billion. So we're not small anymore. We can already fund most of the projects. And in fact, if you're an investor in the Philippines, you get the advantage. We give you long-term rates, we give you pesos, you don't have any FX risk. So you don't need to raise dollars to have a big investment in the Philippines. If you need to buy dollars to remit it out, we can buy $50 million from the market every day easily. It's that deep already.
I think, there is a lot of excitement, I think, in the region, obviously with the launching of the ASEAN Economic Community this year. And I think there are multinationals that we work with that do see very competitive plays in the Philippines that kind of leverage on that. The Philippines, I think, has been really at the leadership level of leveraging the ASEAN Banking Integration Framework.
There are so many new foreign investors going into renewable energy into the Philippines. Why? Because despite people saying we have high energy prices, the reason is because our prices are not subsidized. So from an investor perspective, at least they see the real numbers. And the foreign investors are coming in because they like the feed-in tariff, they like the regime that's happening. And so that's been happening, and the rollout has been very successful.
I think some of the real success stories that you can really highlight, our friends from Subic that are here and stuff like that, that have really seen the infrastructure connectivity and the proximity to the regional markets has been a great draw for many global companies to say, I can locate there and really access regional markets from that location. I think that's a potential that can be built upon with the next administration.
As Secretary Purisima said this morning, which I think is should be underlined, it's going to be, notwithstanding the candidates themselves, it's going to be useful if they have a strong mandate. And if they have a weaker mandate, then policy making might become more complicated. The fiscal challenges are a tax base that isn't that high. And the quality and the efficiency of expenditure. So anything that can be done to improve that would be warranted. And let's face it, we're looking at a country with per capita GDP of $3,000. It has very important infrastructure deficiencies that are going to require primarily a public spend and not a private one.
The two key issues that a lot of U.S. companies that are interested in that space have identified is, number one, strengthening the quote-unquote the bankability of projects. And I think, too, as been mentioned earlier, progress on further, how should we say, solidifying that legal and regulatory environment, like with the PPP law, to create a bit more of that longer-term certainty that maybe would reduce sometimes the need for either credit enhancement or risk mitigating factors to be tabled alongside when private sector want to come to a PPP. I think if that can be done, it'll further enhance sort of the ecosystem for getting more private players to plug into some of these opportunities.
We've had a very strong effort on corruption under the Aquino administration. If that can continue, that would be very welcome. That all will pay off over time in market valuation.